So now I just want to talk a little bit about the value of owning companies, so owning stocks, for the long term. And some people might say, well, gosh, I'm not going to be around that long, I'm retired. Well, most people nowadays, live into their 80s, well into their 80s and 90s, and more people are living to be over 100. So it could very well be, even if you're in your 60s, that you're going to be living for 30 more years, and you're going to need the money to be around for that, to support you as long as you live. So I have some values I just want to compare. Going back to 1985, so that would be the last, 30 years now, 1985. The S&P 500 at the end of 1985, the value that it closed at was 211. And then in 1995, 10 years later, it closed at 615. So the value of the company's stock, the shares for all the companies in the S&P 500 went up, considerably. And then in 2005, the value at the end of December was 1,248. So again, another increase. And then as of November 23rd, 2015, the value was 2,086. So even with bear markets, we've had two pretty good-sized bear markets in 2000 to 2002 and 2008 to 2009. The S&P 500 values of those companies continue to grow. Our gross domestic product, so that would be like the value of our economy in the United States. If it were a company, in 1985 it was $7.71 trillion. In 1995 it was $10.2 trillion. In 2005 it was over 14 trillion. And as of September 30th, 2015, it was 16 trillion. So you can see that our economy in our country continues to grow. It doesn't grow in a straight line. There are ups and downs, but it is expanding and expanding. The S&P earnings per share, so the companies in the S&P 500, if we average out their earnings per share, in 1985, they were $15.68. 1995, up over $37. In 2005, over $76. And right now where we stand, the estimate for the full year would be $118 per share. So here again, we can see companies growing their earnings, values growing. And the dividends, which, we do utilize dividend-paying stocks, they have grown as well. So back in 1985, the average dividend for an S&P 500 company, we take all 500 of them, was $8.20. In 1995, it was $14.17. In 2005, it was $22.38. And the estimate for the end of this year is $43. So when we compare stocks, the value of owning companies versus having companies owe us, which would be bonds or loans, we can see that an expected return on a 20-year U.S. Treasury bond right now versus owning the S&P 500, you would get each year on a $1,000 bond, you would get interest of $27.30. And then you'd get your original $1,000 back in 20 years. So over that time frame, you would have got a total return. You've gotten $546. So you've gotten your plus your $1,000. You get that back. So for the S&P 500 companies, you would get right now you would get $20.04 per year in dividends. And with history as our guide, you could expect that your dividend would increase over time. Some companies in the S&P will reduce dividends, some will go out of business, some will increase dividends. They'll buy each other and merge. Others will be added as new companies we've never even heard of right now. With history as our guide, you could expect that the value of your $1,000 would grow. So of your original $1,000 investment in the S&P 500. So total return using just the dividends, without even the $1,000 growing at all, would be probably about $1,667 for the next 20 years. And if we had a modest increase in value of 1% a year in the value plus the dividends, your total return would be, at least $1,900. And our returns over 20 years have always been higher than 1% a year. So you can see that, it really pays to own companies. They raise prices, they develop new products, etc. And you get paid extra for the volatility. So that's why we do have in your portfolios a mix of investments. So that was everything